Well, in 8 years, starting with no money and no experience and no network and no excuses, I have now ballooned to 80 properties, roughly 4,200 pads. In theory, you have $100,000 worth of equity that's paying you $8,000 a year. That ain't helping, right? What you need to do with that 100K is you need to multiply that. Parking at a deal that'll 2, 3, 4, 5x your money. We have a couple people in the GP. Okay. And then between the plus or minus 5 of us, depending on the deal, location, things and stuff, but we put in ourselves at least 51% of the capital. I have multiple property management LLCs. They all are designed to break even or lose money. So I do not make money on fees. I have 4 priorities. Code enforcement's always number 1. Lease up is always number 2. Collections and Google Drive, baby.
All right, what's up, guys? Welcome back to the video. So in today's podcast, I sit down with Ryan Narus. He's one of the largest mobile home park owners in the entire United States. And he started off in the industry with absolutely none of his own money, eventually found success finding deals for larger investors, rolling in his fees, moving into a community to even learn operations, and now has scaled to over 4,000 units. In this podcast, I sit down with him to talk about a little bit of how he got started in the industry, what it was like moving into and actually living in one of the first parks he operated, how he structures and raises money for his deals, and now what his day-to-day is like actually operating such a huge portfolio. And before this podcast starts, if you guys are interested in learning how to find commercial real estate deals, I do have a free guide on my website, CREDealAccelerator.com. Again, that's CREDealAccelerator.com. 100% free guide, no upsells. It's a free download. You just click there and fill out your info and you'll be able to get it immediately. Whether you're looking to get into real estate or you're a current real estate investor trying to scale up to a large portfolio, or you have a large portfolio and you want to learn a little bit about how you can optimize your systems and processes, this is the video for you. Hope you guys enjoy it. Let's get into it. How's everything been going as far as the market's going? We're talking like it's tougher to get deals out there, man.
Look, I've been at it for going on 8 years, and it's always been tough to get deals. It's just where we're going to at this point in the cycle. It's just going to be different challenges.
Are you anticipating kind of like a big market shift and it continuing to worsen over the next couple of years, or are you still seeing?
Define worsen.
Do you think rates will continue to go up, or do you think?
I think we've seen the highest.
And it's like leveled off now.
Rates will go. Totally an opinion. Everybody's got them. But I think that the U.S. government has the most to lose by keeping interest rates high. And if you look at our debt positions, a lot of them mature within 3 years. Meaning the U.S. government has a lot to lose with really high interest rates. So I think a big reason why we saw such a historic spike in interest rates going up was deliberate. Because the U.S. government, the Fed, realized if we're going to do this thing, we're going to have to gas it up really, really quickly and then drop it. So I think what's going to happen is I think the Fed will stay true to their word for 2023. I think we might see one more itsy bitsy boop. I don't think they're going to drop it this year, unless the bottom drops out. But I personally think we've seen just about the top or the top.
Now, I know we were talking about a little bit off camera, like it's getting tougher for you to buy deals now because lenders just aren't as open to lending, I'd say, as before. Is that kind of what you're feeling?
You know, the funny thing is when I got started 8 years ago, everybody was preaching seller carry, and I just thought I was doing something wrong because I could not find any. And now it's completely flipped because I think what's happening is a lot of people realized that, for the longest time, it just keeps the price of my mobile home park keeps going up. And a lot of these mom and pops have no debt. They've been running it for years. A lot of them built it themselves or their parents built them. And so they don't really want to give them up anyways. And they know them like the back of their hand, and they're profitable. They just don't want to deal with the hassle anymore. And when they've been harassed for years with ever rising prices, and now someone calls and says, actually, you should take a bit of a discount because something happening in the marketplace, they're going, whatever. Like, I still want last year's prices. And I think some people are smart enough to realize they missed the window. And as a result, they're open to seller carry. So I've seen some really, really creative seller carry pop up out of nowhere.
Interesting. So tying it back just to give newer viewers, because most of the people that listen to the show are going out to like my current email blast of already mobile home park investors. But if someone's newer, can you kind of touch on your background, how you got into the industry, and then where you're at now as far as how many parks you own, total unit count, et cetera, et cetera.
Would love to. First, I don't know if I should be looking at the camera or you. He's a very dapper individual,
Thank you.
I do enjoy talking to
good.
him. I respect it. I feel like a dork. I hope my wife doesn't watch. She'll be like, dude, can we just do audio only?
Yeah. we got to show the people who you are, man.
So, my name is Ryan Narus. I am the co-founder of Archimedes Group. I got started 8 years ago in 2015 with no money, no network, and no experience. I'm the host of Mobile Home Parks in Real Life. The podcast is a free podcast. I don't sell anything. I don't ask for anything. I started it 5 years ago in 26 years ago. 5 years ago? It's been a long time.
Yeah.
But I started it because I didn't have anyone to help me that didn't need something from me. Money, deals, whatever, or at least I felt that way when I was getting started. And to pay it forward, I started my podcast and I give away all my secrets. Don't ask for anything. The only thing I ask for is please go out and be a good human being. I think I can affect the world in a very positive way by inspiring the next generation of affordable housing owners, and by giving away my secrets for free, getting good would-be entrepreneurs off the sidelines and into the game is really my goal with it. And I don't care that I'm creating competition. I don't mind losing out on deals, especially if it's someone I know will do really, really well and right by the residents. So why are you tuning into me, and why is this man saying very nice things about me? Well, in 8 years, starting with no money and no experience and no network and no excuses, I have now ballooned to 80 properties, roughly 4,200 pads.
Wow.
That includes 2 RV-only opportunities and 78 mobile home parks. I'm in North Carolina, South Carolina, Tennessee, Georgia, Mississippi, and Florida. And I currently, knock on wood, I'm closing 2 more mobile home parks in Tennessee, which would put me to 80 mobile home parks flat. Y'all, I'm here. I want to help you for free. I don't need anything from you. I just want to inspire good people into our space.
Wow. So I guess a few questions I think someone who's newer in the industry would want to know, including myself. I know we've talked off camera about this in the past. So I'm in a situation now that I want to start moving over to the buy side rather than brokering. Obviously, I don't have tons of money to just go buy a park. In my situation, do you think, since I'm brokering a lot of these parks, would it make more sense to just roll in my fee as an LP on a deal, or do you recommend actually getting on the operations side and becoming a GP and raising money and going that way?
That's an excellent question. So my first deal ever, I rolled in my finder's fee as LP.
Yep.
Nothing wrong with that.
Yep.
And my thought process was it was way too much capital for me to raise.
Yeah.
I didn't know what I was doing. I couldn't confidently go out and pitch someone.
And that's how I feel.
Right. Exactly how I felt.
Yeah.
Excuse me. I rolled it into LP, made a little bit of money, not a lot of bit of money, just a little bit of money, good money, good return. So it was a good, healthy all the way around. And I could say I was a mobile home park owner.
Yeah.
And then every deal thereafter, I was in the general partnership.
Okay.
And that's how I did it. And the reason why my second deal, I was a GP, not an LP, is because as soon as I did it, I went, why did I do this?
Yeah.
Why did I do this? Like, as soon as I got to, because I wanted to be a fly on the wall and you know, be under the wing of an experienced operator.
Yeah.
And what I realized was, I can figure this out. But I'm a natural born entrepreneur. I like being thrown in situations where there is no rule book or owner's manual or anything. You just kind of just like go and start pushing buttons and see what happens.
Yeah.
So I loved it. There's a lot of, unlike when I started 8 years ago, dude, there is just a ton of for pay and free information out there. I mean, you could not consume everything in a reasonable amount of time. We were talking before you hit play. My podcast, as of right now, is like 125 episodes.
Yeah.
That's insane. Like over 100,000 unique downloads, and that's rounding down by tens of thousands and of unique downloads. And it's like, what that tells me is people are out there looking to learn and looking to grow, and you're not doomed to make the same mistakes other entrepreneurs are going to make, but there's a balance that you have to strike, Armand. you can't just sit on the sidelines forever. You have to get on the bike and start pedaling, and it's okay to lose. It's okay to buy a deal and not make money. I've had that happen plenty of times.
Yeah.
And the truth is, as long as you're making money on the whole, those loser deals will help teach you a lot of good things about the space and good things about how to invest, and will help you push forward. But no shame in starting as an LP.
Yeah.
None whatsoever. Find your way into deals.
Yeah.
Period.
Okay. Interesting. Like, because where I get kind of caught up is, and these are kind of selfish questions, but I think it's good content that I think other people would be thinking is, if my skill set is really on the deal sourcing side, and that's what I make my active income to, do I want to pull back on the deal sourcing active income and be focused on running a park, especially first time as a GP? And that's why I was thinking LP, a few deals, and then once I have exits on those, I should have a big nest egg to go buy parks. And I'm kind of on the fence whether I want to raise money or just buy smaller parks on my own. What would you recommend in that?
So
I know that these are very loaded questions. But
no, these are great questions, and these are the same questions I asked when I started.
Yeah.
Everybody, if you want to pull a page from the book of martial arts, every black belt was a white belt at some point.
Yeah.
Everybody's a newbie at some point.
Yeah.
The difference is some people stop being newbies.
You got
You just have to go.
You just gotta get in the game.
You have to go, and you have to have patience. And I think to piggyback off of a bit of advice Andrew Keel gave me years ago on my podcast, he said there's kind of three main legs to a deal. So there's a three-legged stool to every deal. The deal itself, which is exactly what you're talking about, the acquisition side. The money, so equity and debt.
Capital guys,
And then the acquisitions. And when I started with no money, no experience, no network, I realized I could do two out of those three, no problem. I can find a deal because my background was sales. I can operate it because I love operating things. I'm fascinated by business. So I not only can do it, I wanted to do it.
Yeah.
And real estate in general, at least mobile home parks, it's not software engineering.
Yeah.
It's really, I don't want to say easy, it's not. It's simpler. It's not complicated. It is not easy by any means.
Okay.
But you don't need to be a mega genius who's like programming thousands of lines of code.
Yeah.
Not at all. Like it's a pretty simple business. The unit's either leased up or it's not.
Yeah.
They either paid or they didn't.
Or not. Yeah.
You either followed the law or you didn't.
Yeah.
Right? So it's not overly complicated. You just have to get in the game, get your teeth kicked in, be lied to for the first time, and have your heart broken by a tenant in terms of they telling you they were going to do something and they didn't. You just have to get your teeth kicked in, doing that enough times. But the thing is, most people don't want to do that.
Yeah.
Most people don't. Most people don't want to operate.
Yeah.
My friend Colbin Bubis said this, and I loved it, and he took it from someone else. Everybody takes things from other things.
Yeah.
He said this on my podcast. I loved it. He was like, everybody wants to talk about making babies. Nobody wants to talk about raising them.
Yeah.
People start to disappear. People have fun making them, but then when they show up and it starts getting hard, they're gone. Most people want to spend time on the sexy things, which is closing the deal, which is talking about a vision of a future and all these parks and acquisitions and raising capital and selling bankers and selling investors on the deal. But then when it comes to the deal itself, all of a sudden you hear crickets and people start to go away.
Yeah.
That's when I realized I'm not hiring a third-party management company.
Yeah.
I'm going to teach this to myself. I'm going to crush my competition.
I know in your guys' come up, like you and Ian were very hands-on.
Oh, we moved into the
you guys moved
park.
into the park. Yeah. And that was on the first few, correct?
That was my third one ever. Yep.
Wow. Okay. How long were you in that?
So we were in that one for 14 months, and then I moved to another one in Tallahassee for another couple months. So I was about 18 months total.
How do you balance like being able to pay for your life while also trying to scale your own like acquisition of parks? Because I noticed...
Fantastic question.
Yeah, a lot of the times when I'm looking at, I roll in my fee as an LP on this deal, or maybe I try and go buy it. Either way, I'm not getting that $50K check I would have been getting.
Right.
So this year I've been focused on downsizing my lifestyle, aka like I left New York City. That was a total ridiculous idea anyways. I'm in Tampa. I have like a normalized cost of living now that I know how much I could set aside. But like when you're going on to the next deals, if you're focused on operations, when you're raising money on the first few, are you like taking an acquisition fee? Is there anything like that? Or how are you kind of structuring these deals to where you can still pay for your general life? And now I know that you're probably doing the management and getting paid as a manager for those first few.
Right.
And living in the park, so that's clear.
Kind of helps.
But when you
have your living expense.
When your living expense is the park. So
right.
When you started transitioning out of that now, did you just have a few exits or refis to where now you had a big nest egg 3, 4, 5 years in, or were you raising money?
Relatively speaking, yes. Okay. So at the time, I felt like this is more money I've ever had in my life.
Yeah.
Now I'm like,
damn, I lived off that. Yeah, you're fine.
I'm like, what?
Yeah.
That's not a lot of money.
Yeah.
So it's just amazing how quickly it's like they call it the hedonic treadmill because it never is enough.
Yeah.
It's you get that one more zero. And now you're like, all right, I kind of already have this. Let's get that next zero. Yeah. So it never really ends. But, I started in 2015. I didn't move into the mobile home park until 2017. So it took me 2 years.
Yeah.
I did not buy a mobile home park my first 12 months.
Okay.
So we closed on our first 14 months in.
Yep.
And then we closed on our third right at the 2-year mark and quit our jobs and moved into the mobile home park.
Okay.
I paid myself $35,000 a year.
Yeah.
That was it.
Okay.
For 2017... For 2018 and the majority of 2019, I paid myself an annual salary of $35,000 a year. That was it. Every other penny I made, because I made more than that, every other penny I made, I put in a nest egg. And I don't think I paid myself more than $50 until 2021.
Wow.
So you're talking 6 years of my first year. And of my first year, I lost money.
Yeah.
My second year, I think I made $16,000.
Yeah. So either way, there's no way around it. You're going to have to commit a few years of money's all in the parks.
If I told you your first year you would make negative, your second year you would make maybe $1,000 a month.
Yeah.
Your third year you could make a livable salary if you have, depending on your lifestyle.
Yeah.
And if you could just live that way, just for a little bit of time.
Yeah.
A couple years.
Yeah.
For me, it was from 30 to about 33 years old.
Yeah.
Just live, kind of like my residents do.
Yeah.
And then you can live your wildest dreams.
Yeah.
Like nice watches, nice clothes, like randomly bump into celebrities like Allen Iverson. He waved at me when I was running the other day, and I was like, I'm literally speechless. That's the answer there.
Cool.
And he's a super nice guy.
Yeah.
Like you can do all these really, really cool things if you just have patience.
Okay.
And for me, I knew in my heart of hearts, I had conviction that if I just had discipline around the dollar, and I just kept pumping it into the business, it would work out. And knock on wood, it did. And now it's really weird, Armand, because now I went from trying to multiply my money, just aggressively, because if you have nothing, you have no choice but to multiply.
Yeah.
To now I'm like, now I need to preserve some of this, because if you're taking your $50,000 fee, let's say you do 2 deals in quarter one, and you park all of that in LP money, you're getting, let's say, an 8% preferred return on that. That's $8,000 a year. And you have $100,000 of net worth that you've created. That's great. Eventually you pay tax on that, or you might pay tax immediately. I don't know how it's taxed. But in theory, you have $100,000 worth of equity that's paying you $8,000 a year.
Yeah.
That ain't helping, right? What you need to do with that 100K is you need to multiply that. Park it in a deal that'll 2, 3, 4, 5x your money. So your 100 becomes 500.
Yeah.
Cash flow is almost irrelevant.
Yeah.
To me, what I learned early on is like, dude, as long as I have enough to eat, I just need to get as much as humanly possible in equity. My friend Ryan Smith said this in my podcast. Amazing, amazing man, amazing wisdom. He said, you cannot earn yourself wealthy.
Yeah.
And what he meant by that was, unless you're a sports star, movie star, you're making millions and millions of dollars a year, you cannot earn yourself wealthy. Wealth, as of this recording, is not taxed in this country.
Yeah.
So if you can make your money in equity,
you'll
do really well.
Much quicker.
Bingo. And so for me, what I would do with Ian, and I still do to this day, is I'll park my own money in my own deals as an LP, but I'll get a share of the GP.
Okay.
So I'll have money coming in. So I'll park, $100,000. There's my $8,000 a year, but I'll also make a multiple on that, because when I return all the investors, including myself, our money back, now all of a sudden I basically just get not free equity, it's earned, it's sweat equity.
Yeah.
But that's what I did. So the reason why it took so long, say 5 years to get to a reasonable salary, if you will, is because what I basically did was I only taxed the company for what I needed to do to eat.
Yeah.
And keep
everything else was still kept.
Everything else, and then all of a sudden I started having refi come in.
And now the whole game has changed.
Now everything has changed. And you just need patience to get there. Not saying that watch isn't awesome. It is Armand, but that could be a mobile home
This
park.
was my year of, so right now what I'm trying to do is, so the MHP value stuff is different marketing, branding, because I'm trying to start my own team, where if I'm going to jump over to buy side, to keep the lights on essentially, I'm trying to build up systems and processes that are a little more automated for getting in leads, so I don't have to be actively cold calling my days, because I want to be focused on buying. But I still want to keep income coming in. So like right now, I pretty much am automated getting leads from purely email and text blasts that I only have to just spend 30 minutes writing it up, hit click, and then it goes out. So that's been fueling a lot of my deal flow. I'm trying to hire on one of my buddies that's going to be cold calling for me. I'm going to run Facebook ads soon, because I think Facebook ads is the next big thing for deal sourcing. Now, I don't know how you would target where you want to source deals, but as far as the brokerage, like find deals to broker, I think Facebook ads is a big thing. But anyways, because all the people are on Facebook now, which they weren't 5 years ago.
Oh, it's crazy.
But thanks to you, mom and pops are on Facebook. So like your group has a lot of them.
I know, we've got thousands of people.
Part of my Facebook ad targeting is actually going to be targeting your group. Just the people that
wouldn't be the first person.
Yeah. Where was I going with that? Yeah, I'm done with the stupid living. So I had my first year, I was living like an idiot when I first started with Enon.
Yeah.
And that was when we did the Enfield deal.
Yep.
And then I moved to New York totally.
Dude, gotta do it though.
Yeah, New York City.
Yeah.
The first year was worth it. The second year, I actually broke my lease short to move out of Tampa, because I was like, I just got to get out of here.
Yeah.
Because like in New York, you spend $10K in a month, like easy, like ridiculous. So, yeah. Anyways, touching on all of this, what's your day-to-day look like now? Are you mostly buying deals with your own money? Or are you bringing in outside investors, or do you just have like a main capital guy that you still run with for every deal, or how do you kind of structure things now that you're established?
Yeah, so we have so now that Ian has departed, we've brought in a couple of smaller GP people. Okay. So we have a handful of people.
Yeah.
I'm the majority GP, along with my business partner. So we have a couple of people in the GP.
Okay.
And then between the plus or minus 5 of us, depending on the deal, location, things and stuff, the rest is LP. But we put in ourselves, between our GP, at least 51% of the capital.
Okay.
So my pitch to any LP that wants to come in is like, hey, just FYI,
you have more than half the deal.
I have more than half of the LP ship. This is mine.
Yeah.
And you are welcome if I say you can come in.
Yeah, to piggyback off your investment.
But like, if you want out, like, just out. Like, and the reason why is because I know what I can do.
Yeah.
And like, I just don't want to get in rich people fights.
Yeah.
Oh, well, you paid out 9%, I was expecting 10. Like, dude, I'm going to go and make this work.
Yeah.
If you are going to be anything short of like, oh my gosh, Ryan, I've enjoyed this friendship. Yeah. I love how you reconcile your books every business day. I love how you automate all the reports. You give us access to view-only access. So I can trust you, show a ton of transparency.
Yeah.
And you are happy to drive me through all your properties, introduce you to some of the residents, all that. So like, I'm super duper transparent, but like, I ain't got time for investor drama.
Yeah.
I need these parks to work.
Yeah.
I feel like my customer are the people that are living in these communities, and I feel like a lot of people run these as securities.
Yeah.
And they feel like their customer is the investor, and that's not the type of person I attract. And I think we have maybe a dozen investors.
Okay.
And they're all folks we know on a personal level. It's still really friends and family money.
Yeah.
And again, it's for a reason, and that reason is like, there's a reason I don't have a big brand. And that's because I don't want any, Tom, Dick, and Harry. I want real estate specific people who know who I am, who are really comfortable with my personality, who know what I'm about and what I look for in deals, and who believe in it. And I'm going to miss sometimes. And I need adults who are like, you know what, you missed on this one, but you hit on these, let's roll with it. So I do things a little bit differently. I know folks who are like, just throw it up. Have the money wire in. It's just, there's different strategies.
Yeah, it's very interesting that I feel like majority of the other owners that are at your size of portfolios, they take a lot more like retail kind of money. Rather than you, it's very like either it's your deal or just the small group that you have, which is very interesting. Like you really own your deals rather than a lot of the other people I know, they're like more like just trying to chase fees, place the money, raise retail money.
My property management, I have multiple property management LLCs. They all are designed to break even or lose money. Every single one. So I do not make money on fees. I ask for an aggressive promote. Not as aggressive as some people, but I ask for a little bit more on the promote side. Because my pitch is basically like, look, I'm paying you an APREF or whatever the preferred return is. My goal is to double your money plus cash flow along the way. I don't care to fee you to death. I just want to keep the lights on. How I win is more of you win.
More of the upsides. That way you're more inclined to make a profit.
You don't have to do a thing. Oh, and by the way, I have more than you in this LP. So in other words, like I'm promoting off my own dollar and my other business partners' dollars as well. So in other words, like the way I set this up is I just want to, like Warren Buffett says, you have to have incentives properly aligned. And the better you can master that, the more success you'll find in life.
Interesting. Now, who are some of the guys that you partner with on deals now, just out of curiosity on operations?
So I started a mentorship program in the middle of COVID.
And I remember that's how you were getting some people bringing deals to you from that mentorship. And it ended up paying off that way.
Life-changing friendships that I've created from that mentorship program. And it was not what Ian and I started it out to be. We've helped so many people over the years. We just realized that some folks really need a lot of my time, like hours a week. And so we were like, well, let's formalize this. Only take on a handful of folks, then charge for it. But 99% of the people I help out totally for free. And I've shut it down kind of because it's not really that lucrative. It's a big time suck, and most people don't end up doing anything. I'm not interested in taking someone's money and then them not doing anything.
Selling courses.
That being said, I've met some life-changing friendships.
Like I know I think, did Bo come from?
Bo Wiltshire was a friend of mine. We've done, I believe it's 24 deals together now.
You guys pretty much bought all of Fayetteville. Fayetteville is your town now.
And unbelievable. We have 748 lots in Fayetteville.
Wow.
And then we just bought about 200 lots in Biloxi, Mississippi together. So we're just a hair under 1,000 lots. Miles Nolan, another mentee of mine, we bought a couple RV parks together, and we've been looking at some mobile home parks together. Chase Lauterbach and I have been looking at deals together. Lewis Whitley and I have been looking at deals together. Craig Napoliello and I have been looking at deals together. Life-changing friendships I'll keep for the rest of my life. So in other words, to answer your question, I not only have my formerly Archimedes Group stuff now. We just changed the name and rebranded it. Killed off the LLC with Ian leaving, but I also just do deals randomly with people as well. And so I'm live as of this recording on the GP side of 70 mobile home parks / RV parks. So we've got 68 mobile home parks and 2 RV parks. Sorry, 69 because I'm GP on the one RV park but not the other. Your goal should be to get so big you don't even know how
many communities you own.
K1s are a nightmare, by the way.
I bet,
But anyways, look, just you got to find your way into good deals if you pick good people to partner with, and you pick good dirt, and you trust but verify. So you know anybody I do deals with, I show them how I automate. They give me access to their rent manager. I upload stuff for them, and then I automate myself. Reports and stuff so I can make sure the balance sheets are good, the profit and loss statements are good, the collections are strong, stuff is getting leased up, so that way I can be a good investor on the LP. Some of the stuff on the LP side, be a good investor because I can sit back, but also I can automate stuff so they know that I know, and I try to also be a good LP investor too. So, anyways.
Last few questions. I don't want to take up too much of your time, so probably 5 more minutes.
Sure.
What does your day-to-day look like now that you're... Because I'd assume you're less like actually into... I know you're still active and always go to your parks, visit them, drive them, or hands-on.
Constantly.
Yeah, I know that. But I'd imagine most of your day now has to be kind of dictating to the company and making executive-style decisions from the top now because you own so many properties. What does like your day-to-day look like now? Is it constantly just putting out fires, or do you have like really good systems in place for the other guys who are GPing with you, under you? Like, how does that kind of look? Like, you wake up in the morning, what does your day look like?
Well, first off,
I'm sure it's all over the place.
Kids always come first. So that's the beautiful thing about owning my own business is the first thing I do every morning is I take care of my kids.
Awesome.
Anyways, I basically wrote a bunch of code within Rent Manager.
Okay.
And it, like any computer program, you hit bugs.
Yeah.
Any code that you ever write, it's going to hit bugs. So obviously I debug things, I check reports, I automate a lot of reports.
Cool.
But I also, I spend a lot of time making sure things are going according to plan. I am a data junkie.
Okay.
So I look for ways to track data.
Yeah.
So that way I can see, for example, like, all right, we're getting a lot of clicks on our Facebook ads, but it's not yielding a lot of appointments. What's going on? Let's drill down here. So I've basically created a team where I can have one meeting a week with everybody.
Yeah.
Just one 30-minute Zoom call where I just go over, make sure as a leader, my goal is to make sure people are prioritizing.
Yeah.
Not everybody's going to be working every second of every day or even every second of 9 to 5. I know that when I was in corporate America, I sure didn't.
Yeah.
So I'm not going to expect people to always be on it. But when they're on it, I want them to know exactly where I want them spending their time.
Yeah.
To be
So
quite frank, I don't care. A lot of my employees, they start work at 6 a.m.
Yeah.
And then they're done by 2. And
As
a
long
lot
as
of
they
people
hit your KPIs, metrics, or whatever.
I don't care. And one of my employees told me this. He told me, he's like, Ryan, I don't think you understand. That little dashboard you created for me in Rent Manager that stares at me, he was like, I look at that multiple times a day.
Yeah.
And he's like, if the delinquency numbers aren't good enough, he's like, that bothers me.
Yeah.
And in the back of my mind, I'm like, there's no amount of money I could pay this guy that would motivate him more than just by putting the KPIs in his face. And it's not like I'm calling him up, reading it to him.
Yeah. So that way you can always just see like, hey.
It's just staring at him. And the thing is like, he knows that I know I'm looking at the same thing.
Yeah.
And so for me, it's trust but verify. I want all of my employees, they know exactly what is expected of them. I have 4 priorities. Code enforcement's always number 1. Lease up is always number 2. Collections and Google Drive, baby.
Yeah.
Everything's got to get documented, labeled, organized, and put in. One of my employees texted me. She's like, hey, which home are we supposed to be demoing? I was like, have you checked Google Drive? And her response was, yes, boss, that's right.
Yeah.
It's all there. You don't need to ask me.
Yeah.
And that's the beautiful thing about it. And so where am I spending my time now? I mean, I'm able to delegate a lot of stuff now. I still jump in just to check on things, like jump into the phone lines, jump into the corporate email, make sure things are going all right, check to make sure move-ins have been done correctly, background checks have been done correctly. So I do a lot of like trust but verifying, but yeah, of course, like fires find their way up to me. Ridiculous things that happen from code enforcement, Department of Health, crime that happens, it's inevitable. I mean, even if you're in, multi-million-dollar neighborhood, crime still happens. Petty crime too. So it's everywhere. So it's never really going to end. But, beyond that, I still love the acquisition side. So I still spend tons of time talking to owners, brokers, other mobile home park owners.
And I know like even the few deals that you've looked at through us, like you drive the parks with us.
A lot of times,
you're hands-on still.
A lot of times, like you and I have had, I believe, more than one where you're like, hey, what about this deal? And I'm like, yeah, I've known that guy for years. Like I'll call him, he's saved in my cell phone and vice versa. Like a lot of these folks, they know me on a very personal level and vice versa. Because one other thing too, I'll tell you, all you listeners, the way I got so big so fast is I picked a handful of markets. Bo Wiltshire too. He said, I want Fayetteville, North Carolina, and that's it. And he crushed it. Victor Alves, another mentee of mine, he's like, I want San Antonio, Texas, and that's it. And he's got, I think he's up to 5 mobile home parks now. Like you pick one or a handful of markets rather than taking a shotgun approach or crush it. But anyways, all this to say, when you get to the point that I'm at now, it's a lot of trust but verify, and it's a lot of make sure you're setting priorities and you're keeping them simple. and you're just checking in and you're just answering questions.
Okay.
You don't need to be an overbearing boss. You don't need to micromanage. You don't need to, are you working every second of every day? No, a lot of my job, half of my job now, Armand, is just saying like, how you doing?
Yeah.
How's the family? You running a marathon? Are you and just making sure that as difficult of a job it is to be a property manager, a regional manager, or, collection specialist, whatever, like just check it in, because at the end of the day, these employees, they devote more time to us oftentimes than their own families.
Yeah.
So I am dedicated to making sure my employees are having as good of a time on the job as possible, within what I can control. So I kind of stole that from Gary Vaynerchuk, is like, have a heart as an employer and make sure your employees enjoy working for you, and anything you can do for them on a personal level, you try to do it. So that way, hopefully you retain employees for a long time. Anyways, plenty of stuff we could talk about.
Yeah. Last question,
Sure.
to cap it off, kind of like what you were talking about. So there's so many times that, and how I could to try to help you get more deals. So I know that a lot of times we overlap, like when it's something around Charlotte, Greenville, your markets, you already know them. What are some markets that I could target for you to try and source deals that you don't have good coverage on yet? So that way I can prioritize some areas to try and get you deals.
Plenty. I mean, now that we're in Florida, we have about 10 in Orlando and about 10 in Tampa. I'm all over both those markets. I would love Jacksonville. I'm not there yet. I haven't made a single cold call to.
How small in Florida would you buy? If it's like,
just depends, man.
Okay. Because I have 40 units in Winter Haven.
Where's that?
Winter Haven, Lake Wales, like south of Orlando.
Happy to have a look.
Okay. All right. Yeah. I didn't even know you're down there. Are you working with Derek Vickers on anything?
Yeah, Derek and I are partnered on a couple deals.
Okay, cool. I thought you guys were like on one in, I think, north of Orlando or something?
Yeah, we have a couple in DeLand.
DeLand, that was it. Yeah. Okay. All right, yeah, we'll be in touch then.
Just let me know, dude.
I appreciate you coming on the pod and everything, man.
Yeah. Thanks for having me, dude.
Thank you, Ryan.
Yeah,
awesome.
Of course.